Hello folks, this is Tony Drake from Drake & Associates with your April 2015 Educational Economic Update. In this month's video, we'll talk about some of the major economic headlines from last month and give you some insight into what they might mean for you as an investor. Please stay tuned at the end for a required disclosure statement. First quarter earnings season kicked off in April as U.S. firms reported on their performance in the first 3 months of the year. So far, the news is mixed. Out of 280 S&P 500 firms, overall profits were up 9.1%. However, top-line revenue was flat as many firms missed their revenue targets. These results indicate that these firms had weak demand and the earnings came from carefully controlling costs rather than organic growth. The revenue misses were especially stark among firms that depend on global sales. The strong U.S. dollar has hurt conversion rates into dollars and made it more expensive to buy U.S. products. Volatile oil, soft organic growth also affected a lot of firms. On the positive side, we are still able to squeeze out some respectable profits. We also got our first look at Q1 economic growth. Advanced estimates of GDP show that economic basically ground to a halt in the first quarter, growing just 0.2%. Though this early report is based on incomplete data, we can see that exports plunged, businesses slashed investments, and consumers held on to their wallets for dear life. How much of this weakness is still within us in the second quarter? That's the big question that economists need to answer. So far, we know that consumer spending edged upward in March and that wages increased in the first quarter, giving Americans more money to spend. Hopefully, a warmer spring and summer will give consumer spending and business activity a boost. Last month, Federal Reserve Open Market Committee meeting was also a major event. Investors watched the meeting closely to see if the Fed would offer any more guidance about future interest rate hikes. Instead, the Fed completely removed all calendar references from official statements, indicating that a mid-June raise is very unlikely. That takeaway for investors is that the Fed is being very sensitive to the economy, to financial markets, and isn't ready to commit to interest rate hikes yet. This is good news because it shows that the Fed is being very cautious and won't make any sudden moves. In the weeks ahead, investors will be thinking hard about whether first quarter weakness is continuing in the second quarter. While some of that can be attributed to seasonal weather factors that have faded with warmer weather, currency issues and oil price volatility may still be with us. As always, we're keeping a close eye on the economic environment and we'll let you know when circumstances warrant any changes to client strategies. That's it for the April Educational Economic Update. As always, if you have any questions or concerns about what we've discussed, please give our office a call. If you're interested in attending any of our upcoming retirement workshops, Social Security talks, or retirement classes, please call our office at 414-409-7226 or visit us at wealthwisconsin.com. And don't forget to listen in on Saturdays at 1 o'clock for the Retirement Ready Show on 6:20 a.m. Once again, this is Tony Drake with Drake & Associates signing off for this month. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 414-409-7226. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. That's all, folks. Take care.